Remember the G20 and all the talk of currency wars, the end of the dollar as the world's reserve currency, and the return of the gold standard? Well, since then, the dollar has had a bit of a run-up, and the euro is the one that's taking the beating. Can it last? We are about to find out with the Bloomberg Best on foreign exchange. Vasily Serebriakov, currency strategist at Wells Fargo, is with us here. Vasily, what do you think? You heard Jim O'Neill there saying fair value. Well, at least I don't think we had it right there, but he said fair value for the euro is about $1.20. The euro's trading somewhere north of $1.33 this morning. Where's it going?
Yeah, that sounds about right if you take purchasing power parity, for example, estimate. I think what's ahead for the euro, really with all the events in Ireland and Portugal, is a very high probability of some combination of at least either weakness in the euro or perhaps partial restructuring of some of those European debts. And from an investor's point of view, that's certainly not a very attractive proposition.
Why is this not getting priced into the euro already? Everybody is fully aware of what's going on in Europe. They understand that there's contagion risk in Portugal. They understand that there's contagion risk in Spain. And they know how Angela Merkel feels about this. Why aren't they pricing it into the euro now instead of waiting?
Well, I think when we look at the euro relative to the other major economies, it's not that things are going very well, for example, in the United States or even some of the other European neighbors, say the United Kingdom. We've seen some resilience in the Eurozone economic data, primarily thanks to Germany and German exports to the Asian region. That's probably temporary. There'll come a point where fiscal austerity and all the market jitters will start translating into slower growth, and that's probably when we're going to see weaker euro.
Okay, let's talk about short-term and long-term. How much weaker can the euro get short-term? And if you look into 2011, where do you see it going?
Well, I think we could see the euro go as low as 132, 131.50 in the short run. We're probably going to see it back a little bit before the end of the year. I still think the ongoing quantitative easing by the Fed will be the primary market driver. Looking at next year, I think we're looking at levels, below 130 quite realistically. As
far as 120, like maybe Jim is forecasting?
Again, it's the situation is very volatile.
Right?
Is very volatile. I think the real test is whether Spain comes into the picture. If it does, I think the euro can at least retest the previous low.
We've got about a minute left. Let's talk about the dollar. The dollar has had a bit of a run. Does this really take off the table any of this talk that the dollar is no longer enough of a currency to be the world standard? Because you see what's going on in Korea. People run into the dollar. You see what's going on with the euro, people run into the dollar. It's not like they're going for the Brazilian real right now.
Absolutely. The story with the dollar has been, for lack of a better alternative, so to speak. So while there are certainly problems with the U.S. economy, and I do think that the ongoing quantitative easing by the Fed certainly is a very strong cyclical headwind for the dollar. I think as far as we're talking reserve currencies, dollar status is probably not going to be challenged for the next, at least several years.
Vasily, thank you so much for joining us here. Vasily Serebriakov, a Bloomberg Best. He's a currency strategist at Wells Fargo. You heard him say it. 131.50 maybe for the euro next year, sub 130.